Get back to the final part of the show live here from the Nigerian Stock Exchange this Thursday, the 3rd of October. Of course, the opening bell here on the Nigerian Stock Exchange went on 9:30, about an hour and 20 minutes ago. We're still at the opening part of the Nigerian market, opening for this second trading day of the week and of the month. Of course, Tuesday was a public holiday for Nigeria's independence. So today, we're trying to cover the markets for you live here from here and talk about the evolution of the Nigerian financial markets. But again, this conversation is moving on, as we had earlier conversation with Bismarck Rwani. It's all about commodities market, but we have a few issues to trash within the final few minutes of the show, and that's where Temitope Olugbile, who is a member of the economic think tank and a member of financial derivatives company research team, joining us live here at the studio, the floor of the exchange. It's good to have you. A bit of a different feeling from the studios at the headquarters. Yes, I hope you enjoy it. But this is where it all happens. This is where it's happening. Yes. Today is a commodities exchange conference by the SEC, so they understand there's a need to have commodities exchanges in Nigeria to go part of what to talk about agriculture. But that's a different conversation. So if you look at what are the basic and the big burning economic issues, I'm sure the manufacturing data for September is just coming in, not just for Nigeria, but for US and a few other jurisdictions.
Yes, so like you said, the hot topic for today is, the US manufacturing index coming in at a 10-year low of 47.8%. And, now to the domestic manufacturing index, we saw that according to the FBN Quest, Nigeria's PMI reading increased to 56.9 points in September. So, let's take the US let's take the US to start with. So we saw that the US manufacturing index slowed to a 10-year low, and that is after on the brink of that, we had that the jobs report also reported a lower job reading compared to the last month. And that is a worrying trend because we're seeing a slowdown in the U.S. now. We're seeing that, the trade war is affecting both the U.S. and China. So who is really benefiting from this trade war? Just last week, we saw that the China also reported, a weak growth. And, these reports are just worrying and stoking recession fears for 2020. And that is a burning issue. Now, to the response of these reports on, central banks, we have that, market is now increasing the probability of the U.S. Fed reducing rates further at its meeting at the end of this month. It went from a 40% probability to above 60% probability now of another rate cut. So those are our burning issues. And also in response to the heightened fears of demand growth, we're seeing that oil is now below $58 per barrel. As at this morning, we're about $57 per barrel. That is another worrying trend.
I'm sure there are a lot of issues to worry about for those who are on the fiscal side, on the monetary side, everywhere in the world. It's not a very interesting time. But if you take a very quick outlook on the global oil market, as you said, we went all the way to 70, 72 or so. Then we're back now to earth. That's how I put it. I said oil prices are back from back to earth, as it were, below 60.
Yes, we're back.
What's your outlook at FDC?
I would say the outlook for now is still very pessimistic because, there's not much to really make oil prices spike to, except we have a bizarre occurring, when Saudi Arabia's oil facilities were attacked. Apart from that, the outlook is very pessimistic right now. I would say we're at $57 per barrel now, somewhere between 57 and 61 at best, because there's really nothing
for the rest of the year.
Yes, really, except you have an abnormal situation, because there's really nothing to prop oil prices up right now. All we're seeing is dampening effects. We're seeing the U.S. slow down, China slow down. All of these are going to have a dampening effect.
Not with Brexit and Germany as well, even France.
Yeah, so all these economies are having their own slowdown. And of course, oil price will react to that, and that would only push it down further.
So back at home, we're dealing with partial border closure for a couple of weeks now. No one knows. The initial announcement was going to go for 28 days. It looks like this is not going to be much longer than that.
Yes.
What does that mean? How is it beginning to show up in terms of consumer goods here on this side of the border with West Africa?
Yes, so, I would say the the target commodity is rice. So and that has already responded since the border closure. So what we've seen is that since the border closure, there's been a reduced supply, a reduced small goods supply, let's put it like that, but there has not been a simultaneous increase of local supply. So what we are seeing is that there's now an increased demand for limited supply. So you first of all find that there's a scarcity of rice, and then even the ones you find in the market are now going for as high as 24,000 naira for a 50 kg bag. And this is 2 months from the festive season. And of course, rice is a staple, even without the Christmas festivities, a staple all through the year. So, you could just imagine what that would do for consumer purchasing power as we go closer to the Christmas season. And, this is typically the harvest season. So where we should be seeing prices, decline. We've seen tomatoes, pepper, all of that, beans. We've seen that there's been a decline according to our last survey. But, the staple on every Nigerian household table, rice, we are seeing that is spiking to 24,000.
Well, perhaps this is the first Christmas or end of year when rice will not be so common. Perhaps for some of us who like other staples like beans, maybe we're going to make do with beans and dodo and for whatever. And folks may just want to, for the end of year, whatever. Because again, it's an economic story that the Nigerian authorities are pursuing, so we don't want those small good, because we found a couple of fights. In terms of small good items, turkey and chicken and what have you, there were health hazards on that. Even sugar, there are not of low quality being smuggled into the country.
Yes, so you will find that the policymakers will defend their decision. They will defend it, and with good reason, because we find that with a porous border, you find that Nigeria becomes a dumping ground for expired products, which is not good for Nigerian, consumers.
We've got a lot of work to do. Yes. We've got a lot of work to do. Yes, thank you very much for coming through. Temitope Olugbele, a member of the economic think tank and a research analyst with Financial Derivatives Company. The big story that everyone is talking about is the penalty, the sanctions or regulatory discipline by the central bank against 12 banks. That came in yesterday. You've heard the conversation. This is a discipline. The banks are not losing that money, so there's no need for panic withdrawal or anything like that. We'll watch this market for the rest of the day to find out how the market will continue to react to this regulatory action by the central bank. That's about all for today on Business Morning, live from the Nigerian Stock Exchange here in downtown Lagos. I am Bosun Namafaye, and I'll see you again tomorrow.